welcome to Your Trades. Just a week ahead of the budget, or I should say just 3 trading sessions actually. And guess what? We're already knocking on 8,700. Had a truncated week. This one got extremely strong global cues. The Dow conquering 20,000. SGX Nifty already indicating 8,700, and the Nifty futures practically are almost there.
Yeah, and the buyers are following the trend. So because the market is moving up, the FIs have made a bit of a comeback. Yeah, and we've had a pre-budget rally and a strong one. Hopefully this doesn't fizzle away after the budget. That's why we're keeping our fingers crossed.
Yeah, indeed. But just to walk you through the action this week, and we're in the thick of earnings, but the Nifty managed to put on a very strong show. Like Neeraj said, the tide turned with the FII buying, and the figure got only stronger towards the close of the week. The Nifty managed to gain about 3.5%, and like I said, comfortably above that 8650 mark now. Broader markets as well held toe, so almost a 3% rally coming in for the mid and the small cap index respectively as well. Well, it wasn't so great for IT, so Wipro lost. Earnings reaction as well coming in there. The numbers, remember, came in on Thursday. Infy as well was a little bit down. Tech Mahindra ahead of its numbers next week as well was a little soft. But it was the gainers which hogged the limelight. Hindalco put on a stellar show with a double-digit run. HDFC held out very smartly. And then, of course, Idea as well saw a fair amount of short covering after getting extremely beaten down in the last fortnight or so. BOB came about. Kotak Bank delivered extremely strongly after its numbers, so 9% rally thereabouts coming in for Kotak Bank, and BHEL as well put on a great show with an excess of an 8% take. And then, of course, there were so many individual stock-specific reactions. Primary activity, market activity as well was extremely buoyant because of the BSE IPO.
Yeah, so BSE IPO, of course, a big news maker, frankly, because of the subscription. And next week after the budget, the listing will also be making headlines. That is one. But I think results stood out for a lot of companies. Though, yes, you would argue that it is liquidity which is driving this market. But frankly, companies which came out with decent numbers got rewarded big time. I mean, Kotak Bank is one example. But look at the broader end of the spectrum. Bharat Financial was strong performance in a very tough environment because of demonetization. And Bharat Financial clocked in almost 12% gains. So excellent move for this one. Very good numbers, 742 and counting. So the going is looking good for this one. Results impact also seen for IIFL. I think the numbers were fairly decent. And it showed in the way the stock rallied about 11% for the week gone by. IGL trading at new highs. And on Friday, there was some news. The reason I bring it up is because Friday was a very big move. They might actually find a completely new business line in supplying gas to gensets in the NCR region. And that could be big for IGL. Let's wait and watch. Of course, speaking of new highs, a bunch of other names. So Adani Enterprises, City Union Bank, there was Infibeam, Quest Corp had a fairly decent quarter as well. So I think it looked fairly okay. Adani was the star in Friday's session, yes, but otherwise has not done too badly. City Union Bank, 8.5% trading at new highs as well. So a lot of names did very well. The question to our experts, though, is whether this can continue and what is it that they are working with. So let's first get in Sanjeev Bhasin with his thoughts on the market. He's Executive Vice President, Markets and Corporate Affairs at India Infoline, joins us on the line from Delhi. Sanjeev, I'm so tempted to ask you about IIFL as well, but I won't do that obviously. But the broad mood point is that this week, as much as it was about the global rally and flows, it was also about how results aided the momentum and the sentiment.
Well, yes. So Neeraj, if you recall, at 7,900, I put my neck out and said that fear is the best time to buy. The devil of demonetization may not play out as most pessimists are ruling out. And thirdly, the large part of the initiatives from the government, by the PM and the low, interest subvention, low cost housing, all those played out brilliantly. So lo and behold, we said 10,000 by the end of 2017. Now I can again put my neck out and say 10,000 by end of June is on the card for Nifty. At 87, 88, we'll just make up for the lost ground which we had at the end of September. And I think at least a 10% upside on the back of most people on the sideline on improving macros and results which have pleasantly surprised on the upside. So all put together, extremely bullish moves coming in, notwithstanding the big elephant in the room, which continues to be the budget.
Yeah, and Sanjeev, the big takeaway from the earnings this week, as was the last one, have been that I guess the devil of demonetization was perhaps played out too much, because it hasn't spelt out the way in some of the FMCG earnings. At least we saw ITC deliver just on Friday, and it didn't seem like it was that marred by demonetization woes.
Exactly, the worst hit sectors where there was stout were the NBFCs, banks, and thirdly the consumption stocks. So in staples, you've had ITC deliver in line or slightly ahead. You've had even consumer discretionary stocks. I would say even Asian Paints or the likes of the private banks, particularly leading from the front was IndusInd. Then you had Kotak and HDFC all in line. So I think, like you said, like we felt that the pessimism was far too high. There was consensus bearishness at 7,900, and you were having that left out feeling on the back that this one quarter would be the hiatus, and after that again this would rebound. So I think it was a perfect storm which has played out brilliantly. If you went long and you bought fear, and we've always held sell greed and buy fear, the proverbial will always stand true in these type of times.
Okay. Yeah, I mean, I think banks really have done wonderful. At least the private banks have done so well. One only hopes that the PSU banks don't disappoint, as tough as it would be, but one only hopes that the PSU banks don't disappoint. Before we just move to the mid caps, Sanjeev, a quick word on IT as well. And the reason I bring it up is because this week is all about IT earnings. And while HCL Tech came out and delivered very well, and the guidance looks okay, Wipro is once again disappointed. I mean, for anybody who's holding on to Wipro from the retail space, is it time to switch if you want to stay in IT, or just get out of Wipro completely? Maybe move to HCL, maybe Infosys?
Well, if you have held on to it, our view is slightly contrarian. We think at these 465, 470 levels, the downside is very, very minimum. The Apreo, inorganic buyout is going to play out very well in the next 2 quarters. B, in this quarter, we saw a lot of traction on the energy and the healthcare vertical, and that we think can be, much better played out in the second half. And C, Wipro sits on huge cash. So whether it's a buyout, a higher dividend, or another inorganic buyout, which they are delving into, should give you some upside, room for upside. We think a 15% upside in 2017 cannot be ruled out. The downside seem minimum, but like you said, if you want to play stocks which have given better earnings and where the visibility is more, then for us it is TCS, HCL Tech, and in the mid cap maybe a Mindtree at this 465. Trading at 7.5, 8 times, the stock must be the cheapest, and the management has sounded fairly bullish on the volume front coming back in the second half.
Fair point. Sanjeev, hold on to that thought. Lots more to chat about. Lot was happening within the broader markets as well. But we'll do all of that after this very quick break.
Right, back with your trades the week ahead. And if you're joining in right now, wondering what's happened in the week, quickly tell you what was the highlight for the week gone by. The Nifty and the Sensex gained over 2.5% this week, led predominantly by momentum that happened in the global markets as well.
Well, the Dow Jones managed to surpass Mount 20K as Trump rally rolled on. And also individual stocks like Kotak Bank back home clocked in a very healthy third quarter. The stock managed to gain nicely, well above that 8% mark.
Wipro was the other stock which was top of the headline, delivered the slowest guidance in the top tier IT names. The stock corrected 3% this week.
Well, talk about the mid-caps, and Bharat Financial delivered an extremely strong third quarter in a tough environment. Microfinance stocks rallied quite hard.
Amongst other names, Trent, Bhushan Steel, Adani Enterprises churned out double-digit rallies on news or opinion, and these were the top movers at the mid-cap end of the market. So that's essentially what happened in the week gone by. But if you are tuning in right now, we've spoken a lot about the large caps and the result makers. Let's talk about the mid cap end of the market specifically with Anand Dubash from our research desk, who joins in and recounts the top mid cap movers and the reasons thereof. Avan?
Well, this time around, majority of the mid-cap movers were largely on account of results. You had United Spirits, which posted a profit of 147 crore rupees. There was a big beat on the gross margins, which came in at 42.9%. But more importantly, SEBI said that they may issue an order of violation for the takeover code and may ask Diageo to make a fresh open offer for investors. You had IIFL in focus as the profits came in higher by 41%. The total income from operations grew 30%. The fund-based revenues, financial products revenues and capital markets revenues all came in very healthy, with asset quality improving, and they may demerge the realty advisory unit from the subsidiary IFSL. Ashok Leyland's export volumes for Q3 came in higher by 11% at 2,942 units. The revenues came in at 4,723 crores and reported margins at about 10.3%. And MOIL reacted to the divestment news as the government will be divesting about 1.3 crore shares or 10% equity via the OFS route, to the floor price set at about 365 rupees a piece.
Well, quite a few mid-caps which were really holding out very smartly. Sachidanand as well joins in on the show to talk about his technical take on the markets. Sachidanand, hi. Can't help but talk about the strength in names like MOIL. And this is not a one-day story. This has been a very consistent performer. The question is, where from here for traders?
Well, good evening. Yes, we've already seen a good rally in the entire market, and if you look at MOIL as such, we have already seen the stock now stabilizing somewhere close to 370. The overall trend has been good for the stock. 340, 355 has been a good base for the stock, and it is inching towards it. So I think this is a good time wherein one can look at the stock, and some trading longs can be initiated, keeping the stop loss somewhere close to 355.
Okay, so Sachidanand, if somebody is trading the index or any of the large cap names, what should he or she do next week? What is your trading? What are the trading levels on the index considering its budget next week? And what are the top trades that you are recommending from your end?
Well, if you look at last week, we saw 8450 acting as a very stiff resistance, and Nifty merely moved throughout the week. But during this particular week, when we saw this particular level getting taken off, the momentum just amplified, and we have seen just a follow-up of this particular move. So if you look at some of the momentum oscillators, yes, they are in the overbought zone, but there is no sign of any weakness here. So if you look at the overall trend from a weekly perspective, there is no sign of any weakness so far. If you look at the entire move and compare it with the previous wave, the 78.6 retracement comes down 87.40, and we expect this particular move to continue towards that. On the lower side now, 8500 remains as a critical support. This is the level wherein we saw a gap up opening during the week, and this particular level will be a vital level to watch out during the budget week. So overall, the stance on the market remains positive, at least for the initial part of the week, and we expect the market to trend higher. One is Indocount Limited, wherein we have already seen a good continuation pattern getting formed, and a breakout was visible in today's session as well. We expect the stock to head higher towards the level of around 205. That is basically the pattern target, and the stop loss can be placed at around 182. The second stock that we like is from the energy space. If you look at the entire year, the energy pack has been very consistent. Now this is one particular area wherein long positions can be initiated even on a decline, and Petronet LNG has been consolidating very well. We saw a triangular kind of a pattern formation on the weekly scale, and this particular pattern now looks mature. We expect a price target of around 420 to be seen, and stop loss can be placed close to around 380. One call is on the sell side, wherein Sun Pharma has been consistently drifting down. Even right now, 655, 660 has been a very crucial resistance.
Right. Okay. Interesting stock ideas coming in from Sachidanand. Sanjeev, want to get your opinion in as well. Any investment idea or you think pre-budget move that investors shouldn't miss out on?
Yeah, so three stocks mainly in the consumption and one in the rural stroke chemical space. Tata Chemicals is our topic over there, even though it's run up in the last 3 days, 515, 520, where we think you should buy even at these rates. We think this is the best play, 1 on the urea and the fertilizer side, 2 on the salt side, and 3 on the chemicals business. They are the largest player in the soda ash and caustic soda business, and we think this China environment issues should play out even in 2017, which means the cushion of higher profit and margins is very, very clearly evident. We think a 25% upside from these levels is easily achievable on Tata Chemical. The other 2 would be consumption plays on the beverage market. Tata Global, the largest player in the tea, coffee and water market, and the Starbucks franchise only gaining further momentum. We think at 128, 130 levels there's a 20% upside with hardly any downside, as results and margins will be well in excess of the upside. Third would be United Spirits, again our preferred pick at 1850. We still think an open offer could be the icing on the cake. However, the margin expansion and the new brand launch, which the management has indicated, has made us very, very bullish. We think levels of 2750 to 2900 is on the cards in 2017.
All right. Sanjeev as well as Sachidanand, thanks so much, gentlemen, for joining in today and giving us your thoughts and your recommendations. With that, it's a wrap on this leg of your trades. Thanks so much for being with us. Have a great weekend. We'll see you with the markets and, more importantly, the budget week action next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.